In this video, traders, we're going to if we know that price makes an intraday high or low early on in the day, how can we use that to our advantage as traders? Stay tuned. Hey guys, a very warm welcome to you. Thanks for tuning in. All right, so studies show that very often the intraday high or low of the day is made within the first 15 minutes of the day. And some studies show that it's within the first kind of 5 minutes of the day. And that doesn't surprise me. Probably doesn't surprise you either. If you're day trading, you see this all the time. So how do we take advantage of that as traders? How do we say, okay, well, if this is the low of the day or the high of the day, how can I leverage on that for the maximum kind of opportunity and money for one? That's what we're here for, guys, isn't it? To make as much money as possible with the least risk as possible. So okay, so what do we do? So if we know this, the big thing that we've got to do as day traders, we've got to say to ourselves, listen, if we're on the end of a good move, do not snatch the profits. For me particularly, it's something I have to say to myself and have to be aware of if I'm trading intraday. So if I'm trading the open starts to drive and I feel I've got a good entry, hold the thing and be comfortable holding it. It will retrace on you, it will unwind on you, but if statistics show that the majority of the days, and even if it's 55-60% of the days make that low, and that's a low, you've got a good chance of it being the low of the day. So you've got a very good chance of at least extending. So you basically say to yourself this: if I am trading an opening drive and there is a low or high in, at least give myself the opportunity to hold on to this for a trend day move or for a significant move. Now, a significant move as well could be the ATR that we're running at the moment. If the ATR is running 100 and you've already done 30 and you happen to be in on it, then why not look and have that as your daily target and say, right, okay, well, that's my intraday trade. If I know the majority of the time we hit 100 pips range, whatever the number may be, we've got 30. I also know majority of the time we put the high or low of the day in the first 5 minutes, 10 minutes, 15 minutes. We've had that gone, the low's there. I'm already in, I've got a cushion. You've got all the evidence you need to potentially hold that trade for that decent move up to the high, whatever that is, however you extrapolate that ATR. And so how you use this is to say to yourself, if I am in that level, if I'm in early on a trade, I can hold it. You can also say to yourself, all right, if we have started to trend, I can use this as a stop. Now, some cases it might be so wide, but if we're looking at things and we're saying, all right, so the expected range of the day is 100 pips. We've done 20 so far. We're pulling back. I'm buying this pullback. And the stop now is, let's say it's 18 pips. 18 pips under, because that's where the low is, and you're leveraging on this, which is that price hits the high or low of the day early on. We're going to assume that's the low for the day. We're going to make some assumption. We don't have to manage the risk at some point, which is why we've got to stop there. But the assumption is if that's the case, then maybe we're going to get at least an extension into the middle of the day, into lunchtime. So once you've got the bias and you've got the trade entry with a decent risk reward, i.e. you're risking 18 to make 100 or whatever the numbers may be, because that's your daily range, that's your ATR, that's the expected range, and you don't expect that low to be taken out, then you can leverage on that and you can say, right, well, let me get long, let me not get shaken out, let me accept that that's not a lot of risk, let me accept that the stats are on my side, and let me hold it. Too many day traders, and you know, I fall into this trap as well from time to time, guys, so you know, it happens. We get on board at opening drive and we come out and we grab our profits and go, right, the first 15 minutes we expect 25 pip range, I've got 28, I'm a genius, put it in your pocket and move on. Where in reality, you know, maybe there's something to be said for extending that target. Maybe there's something to be said for saying, okay, let's leverage on this data that someone's very kindly gone and done. Let's leverage on the fact that we know this to be the case. Let's add more weight to it and say, well, actually yesterday did this and this, the prior day's done this and this. So I'm adding my layers of edge and then look to hold for a bigger move. Because day traders were so keen on grabbing those profits, guys. One good trade a day is more than sufficient. And that could be the one. If you're on it and it's right, you're going to get many multiples. Look at the risk reward ratio, far more more substantial risk reward ratio than if you were just kind of grabbing that 15-minute drive or whatever and looking for a kind of peak and exhaustion within that drive, as opposed to saying, okay, there's going to be a drive, there's going to be a bigger pullback. I'm happy to sit through that because I know the premise is that we may well get a broader move from it, and I'm actually in quite a good position already, and I don't want to waste that position by just selling it for a quick 30 pip gain or whatever it is. I know there's potentially 2 or 3 times more on the table if I just leverage on that and trust in it and say, time to time it's not going to happen, but I'm in a good position now, let me ride it and see what happens. So anyway guys, let me know your thoughts on that. If we make a high or low, if statistics show, should I say, that we make a high or low in the early part of the day, first 15 minutes call it, how would you trade? How do you then position to make sure you take advantage of that statistic and get the most opportunity out of the day? Take care, whatever you're doing, keep your risk managed. Goodbye.